Good afternoon, everybody. Today I'm chatting with Daniel Major from GoviEx Uranium. Guys, I think that GoviEx is a really interesting company because they have nearly 130 million pounds of measured and indicated uranium in the ground. Now, I believe that they trade at a little bit of a discount because of some of the political concerns in Africa, where they have two projects, one in Niger and another in Zambia. Now, recently, there were headlines in Niger as a result of Niger canceling its agreement with the U.S. for a drone military base, which some people are saying could open the door for stronger ties between Niger and Russia. Daniel has been operating in Africa for years, and particularly in Niger the last few years, and he gives us his thoughts on what's really happening. Also, in this interview, we get into what's happening in the uranium market in regards to the contract market versus the spot price market, of which Daniel has lots of experience, both having worked for Rio Tinto and as an analyst in the uranium sector. Guys, if you are looking to own a basket of uranium companies and you want some that have some pretty high upside, I think that this is a company that at the very least is worth having on your watch list and doing some due diligence on. All right, everyone, enjoy the interview. Daniel, thanks so much for joining us today.
Yeah, thank you very much for the invite. It's a new one for me, and I'm great to be here.
So it's timely having you on because just last week, Niger's military junta canceled their agreement with the Pentagon for a strategically important U.S. drone base in the northern deserts, opening the door for Russia to further bolster its growing troop presence in West Africa. Is that a fair characterization of what's happening here from your view? What's happening right now in Niger?
No, I think that's taking it out of context, and I think the press have overridden this, as they always do, because they like fairly inflammatory statements to make. The US have had a drone base there in Niger since 2012. And have been very engaged in the whole security over that area of ground. The US pulled some of its staff out after the coup in July, and they've been ongoing in discussions with the Nigerians. The US sent a series of dignitaries in for a short meeting. The Nigerians are very strong on protocols, and they don't like it if you don't follow protocol. And the Americans just turned up in the view of the Nigerians, and in true superpower style, according to the Nigerians, were fairly aggressive in their discussions and their statements to the junta. The junta pointed this all out and just, in our transcript of what we believe was stated by the government, they basically were telling the Americans off for their approach and how they didn't like it, and were denouncing the way that the Americans were phrasing it and saying, we're a sovereign country, we'll do what we want. They did not say in our transcript of it that they were kicking the Americans out at all. In fact, they stressed in their transcript it was the Americans who had been reducing their people numbers and taking people out of the country. So I do think this has been read wrong. I looked at the Pentagon statement that went out as well, which is, taking it, when you read it, it's like, I've taken on your criticism and we will continue discussions. And so I think that's very much where it is. And we'll continue to monitor that and see where it goes. So I felt it was rather more a public reprimand to the US by the Nigerians, and the US taking that on board. And I think we watch the next steps where it goes. But I'm certainly not seeing this as a sudden, okay, the Americans are having to leave.
Okay, so moving on here, it's the first time we've had you on. I know you have extensive experience in uranium, and although uranium's pulled back a little bit really recently, we're still pretty much in a bull market. We've gone from the mid 20s to now we're sitting in the mid 80s over just a few year period. Hard not to say that isn't a very strong bull market. How do you find this bull market different than the previous one that we saw, say, around 2010?
I think your biggest difference this time around is actually there's no inventory.
Okay.
We've had other bull markets insofar as, you had 2007 when Cameco Cigar Lake flooded. Things got tight around 2011. But for the first time, you really are in a position where there's just no inventory. The utilities are sitting with around 2 years of inventory. You've got the geopolitics, but also the other thing that you have is you've got a very strong growth profile out there as well. You're in a position where a lot of the mines that are operating today are coming to the end of their lives and are going to start closing down over the next decade, and they all need replacing. So I think the fundamentals of this bull market are very much a supply demand, straightforward, what you want to see, supply demand driven issue, and that it is the cost of mining, the cost of capital that is now going to drive that uranium price going forward.
Now, I know you don't have a crystal ball here, and I'm essentially asking you to pull one out. But where do you think we are in this cycle? Do you think that the mid 80s is a sustainable price level? You think it can go a lot higher? You think that we need a whole bunch of new producers to show up to feed what is clearly, and we can say this because it's happening with various countries around the world, the sentiment towards nuclear power generation has changed. It's changed drastically over the last 3 years. Does that mean that we're going to have, like right now, if I look at the basket of publicly traded companies, there's only like 3 or 4, maybe 5 that actually produce anything. And is that universe going to look a lot different in, say, 7 years in terms of the publicly traded companies? And where do we see the price heading sort of, say, 5 to 10 years down the road?
You've just given me a complete juggling set of balls there to like one would have been enough.
Your background was you were an analyst, right?
Yeah, well, exactly. So we'll start at the beginning of that. I think first thing we've got to do is take your price structure that you're talking about. You took it at 85. That's the spot price. Let's look at the contract price, which is down at 75. Spots announced daily. It doesn't mean a trade is done to justify the spot. It's whatever a bid or an offer is sitting out there, and that defines it. Then you've got the term contract that only gets reported monthly and is only on the public contracts that go through. So I think the first point to make is that, as the uranium price gets higher, the spot volumes get smaller. Standard in this industry, because you've got volatility out there and the utilities will pull back into the term contract because they now want to lock in that volatility and tie it through. So the fact that we've seen the uranium price go all the way up to 107 and come back to 104 has been on tiny volumes, and predominantly because of lack of volume around. People just were not willing to do that trade. You're now going to see that volatility is going to come through. I think you're still sitting with a risk to the upside, simply because there just isn't material. You've got to remember as well that spot market is discretionary. So it really is about, oh my goodness, I need some pounds and I need them quickly because I've got a contract to cover, I've got something else. And depending on who's in that market at the time, that is what's going to drive that price at any one time. So we're in that point now on the spot market that the volatility is there. I think you've seen recently with that pullback to 84, it very quickly, the sellers disappeared. And the buyers had to come back and say, right, I want it. And so what now starting to see that price go up. So I think your volatility is much more to the upside here. We could see well over 100. We could see even higher than that. If you suddenly get the financial buyers back in who aren't really around a lot at the moment, that could also push forward. The other side is that term contract. We're up at 75. That's a good solid number that we're starting to see. But I think that term contract still got legs to go higher. I think we'll certainly see term contracts break over $80 on that price as well. We're seeing, talk in the market of people looking at collared contracts going forward, a floor at 75 and the ceiling at 120 linked to that spot price. So clearly we are getting that underpin. If longer that we stay at $80 spot plus, you're going to see that term contract pull up with it. On the issue that you last point on, assets, no, I mean, you are going to see there are a number of companies around the world with projects trying to bring them into play because we need them. If you look at any of the forecasts out there, we got a position now where there's a number of projects, restarts or new projects that are going to come in. It will start to tighten up the market a little bit. But once you go past 2030, your bigger projects, whether it's the Kazakhs, whether it's Cameco at Cigar Lake, start to decline from that point onwards and need to be refilled. And when you look at Kazatomprom's presentation for their IPO when they originally came to market, 2030 was their peak and it fades away. And I put a slide in my own presentation that kind of highlights this. If you look at WNA's numbers, 2022, 75% of all uranium consumed came from mines that are currently producing. 25% came from inventory and other places that, underfeeding, etc. So you roll that forward into their forecast for 2030, well, only 64% of all uranium consumed will come from mines that are currently operating. The majority will have to come from new projects because the secondary is declining sharply. By 2040, the existing mines will only account for 20% of supply. The rest is going to have to be new projects that are going to get built out there to fill that gap. So we have got a really big risk sitting out there that projects don't come on time, don't come in on schedule. And even if they do come on, we still need more based on the current forecast.
So let's talk about your company, GoviEx. What's the high-level overview for GoviEx? As we sort of talked about in the beginning, you guys do have a project in Niger, lots of pounds. What can you tell us?
Right. Quite simply, we're a developer. We've got two main projects. They are both in Africa. We have the Madaouela Project, which is in Niger. That is right next to the Arano mines of Somaïr and Cominac. Cominac actually closed in 2021, but those two mines they were about the fifth largest producer for a while. They provided about 8% of the world's uranium. In 2023, they were 25% of all the supply into Europe. Those mines were. So good infrastructure, everything. That one, feasibility study was done in 2022. We've been working on the debt financing. We actually managed to get the LOIs on the day of the coup for $200 million. We had to have a bit of a pause in there. And we used that pause to deal with update our environmental permitting in Niger. But as we kind of announced at the beginning of this week, we've now just started some field work on there. We've started on the final engineering design work, and we'll gradually progress forward while we work on the financing options. We then have the Mutanga project down in Zambia, which is also mine permitted. We are pushing forward at the moment on that project to get its feasibility study done by the late summer of this year. Its ESIA is being updated to an IFC standard. That will also get done this year as well. And we'll push that one straight through into financing and look to get it developed as well as quickly as possible.
Something I'm sure that is a big part of your conversation when you talk to institutional investors or high net worth individuals or analysts or whoever is trying to get them comfortable with Africa as a jurisdiction. What's your argument there? What do you tell investors when they feel a little bit uncomfortable about some of the political instability that exists within Africa?
Well, I mean, let's start with Niger. I mean, look, Niger is having its issues at the moment. I mean, and this is African politics. But Niger has produced uranium consistently pretty well since 1971. While we've been in Niger, we've had two coups, and it still kept producing. I mean, there's been a bit of a hiatus at the moment because ECOWAS, the economic states, sanctioned the borders, but those are now open. And so everything can get back into normal flow. But it's not stopped producing at any time. And so, governments still want taxes to be paid and going forward. But when you look at it from the other side of how we operate, whether it's in Zambia and Niger, and I got a question from a shareholder the other day. I mean, the nice thing about it is you know exactly who you're dealing with when you're dealing with things like the environmental issues, etc. You're dealing with the government. In Niger, all of our land is held by the government. We deal directly with the government on land rights, etc. Our permitting process is very quickly. We've just redone our ESIA. You go through the whole thing with the Department of the Environment. They come do a checkup on our stakeholder engagement. And then there's a really big meeting in the town of Agadez where everybody turns up at once. And you all sit down and you go through the document page by page. Recommendations are made, questions are answered. At the end of the week, you fill in those recommendations and you get permitted. So it's a very straightforward. So unlike, Canada, where it takes years and every man and his dog and frog is allowed to be involved in that conversation and you keep going back and forth until you resolve it, it's a lot quicker process. The same in Zambia. We have a very clear pipeline on how things work. We're dealing with the traditional chiefs down there. They own the land. We therefore deal with them directly. We don't have to deal with 100 landowners. We can deal with them. So the process is very quick. These are governments whose economies are driven. So you don't have that weird bipolar effect where, like you have in Canada, where we're a pro-mining country, but we make it really difficult for you to mine. We don't have that problem. We're pro-mining and we want you to mine.
So, Daniel, to move these projects forward, you are going to need to go and raise a considerable amount of project financing. How challenging is this going to be? Do you guys, if I'm an investor, I'm looking at this and I'm saying, okay, there's a huge amount of potential dilution in front of me. Although I do look at the share price and I look at the amount of pounds I'm paying for relative to the enterprise value or market cap. It looks like a great deal, but I still know that there's this huge amount of financing that needs to get done. How can I get comfort in that?
Look, at the end of the day, you don't come looking for that really large amount of equity until you know you've got the debt sorted out. And that's the process that we have to go through and take off the risks that the big equity requirement comes through. So that's one part of it. So hopefully with the valuation, as we line up debt and we start sorting that out, we get line up offtake, you would hope that our valuation improves accordingly on both of them. The other thing that sits out here, there's nothing to say that any equity raised has to be at the corporate level. It could be at the project level as well. Who's to say that we don't come in with a transaction that puts a part of either of those projects out to a third party for investment directly into the project for a stake, and as long as that's commensurate to the value of that project, that's very anti-dilutive, particularly, and very high value for what the investors are looking at it. So, we don't just assume that we're going to come out to the market and raise our money straight from the equity players at the capital markets. There are other places for us to go looking for that equity as well. So, we look at all those options that are out there.
What can you tell us about the cap table? And I have to ask that because here we are in Canada, in the penny stock world. There's a lot of bad actors, as I'm sure you're well aware of, having been CEO of a micro cap in Canada and probably seen stuff that makes you roll your eyes. What price have most of the shareholders paid for the stock? Are there any escrowed shares that they should worry about? Any significant investors that are worth noting?
No escrowed shares, to start with that one. We have major funds in here as well, particularly the uranium funds are sitting in there holding shares. The insiders are holding about 11%. On the amount of shares, I often get that question. I mean, it's a really interesting one because then you say, well, what do you want me to do? Rollback. And they go, oh, no, but rollbacks never work. I'm like, absolutely. Straight rollbacks for no reason are not the logical way to go. We will continue to examine that, but it will be a rollback and a tidy up of the cap structure at a time that's appropriate to do it. that it's structural, that's a transaction, or there is a large raise for funding the project that goes through, and then we will clean it up in one go. That may involve a move to an exchange as well that justifies the whole thing getting done from that point of view. But, having a lot of shares, isn't brutal. It's not fatal. I mean, look at the Aussie stocks. They're all sitting with a lot of shares out there. It just means liquidity at the end of the day. So, we monitor it. And it's not a fact, people look at it as dilution. There was a study out by UX Consulting last year, which looked at the amount of money raised by development companies. And GoviEx is actually one of the companies that raises the least amount of money. I run a very tight ship when it comes to the amount of money how we use our money, and where we put it, from that point of view. And we run three projects on that as well. So
I have to ask, so we have the Madaouela Project. Is this is hard rock or heap leach, or is it in situ?
That's a hard rock project. We start with an open pit, then it moves underground into separate underground. That one is going into what we would call tank leach. So we will put it into 2 separate tanks. We do that because it halves our acid consumption by doing it that way. Acid's your biggest consumable, and then it goes all the way through to produce U3O8. Because of the low acid consumption we get out of that, it kind of works as a project and makes it really, really useful. If you look at our Mutanga project, that's different. That is a big heap leaching operation. The grades are lower compared to Madaouela, but the benefit there is very low strip ratio, but very low acid consumption because it's secondary, it's weathered uranium. And so we consume 1/5 of our acid in Zambia than we do in Niger. In a country in Zambia that produces sulfuric acid as a byproduct out of the copper industry. So, it's a net exporter of acid. Zambia is. There's plenty of it around. So, on those 2 projects, just comparing our own 2 projects, the grades are very different. One's 1/5 the other, but its input costs are much lower as individual units. Our power cost is 1/2 in Zambia than it is in Niger. We pay 7-8 cents for power in Zambia. So, these are all positive things that support that project, and it's low capital.
Okay, last question for you, Daniel. If I am an investor watching, potential investor trying to evaluate whether I want to get into the story, what does the next, let's say 2024, what does it look like in terms of potential milestones, timelines? What am I looking out for if I'm trying to evaluate management execution?
Yeah, absolutely. Well, I think the recent price move is a great buying opportunity to start with. As I said at the beginning of this thing, I think there's some politics there that's not been fully read through. If you look at where we are, you are looking at certainly on the Mutanga project. The next step is going to be that feasibility study late the summer. When we did the PEA back in 2017, it showed a low capex project, great returns on it. Expect the same. We'll pull that story through. On Madaouela, it's going to be continued conversation on us sorting out the financing for that project, and it's at a steady development. So, there's no big catalyst for Madaouela at the moment, but that we can tell you significantly on the date. But it's us pulling together all of the jigsaw pieces that are required for it.
Very well, Daniel, I think you got a really interesting story here. I feel like the market's discounting you guys a little bit as a result of being in Africa, but you guys get to production, and cash flow's king, right? And investors are going to find you once you get there. So thanks for hopping on here. I really enjoyed hearing about the story, and hopefully you can hop back on in the future as the story continues to unfold.
No, that'd be really appreciated. And thanks. It's been a good interview. Cheers.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.